A familiar circular vacuum still moved across American floors while, inside a Delaware courtroom, every public share of the company that created it was being erased without recovery. The Roomba brand survived, but iRobot's independence did not, leaving an American robotics pioneer owned by the overseas manufacturer that had become both its supplier and financial lifeline. There was no fatal recall, criminal indictment, or televised scandal behind the collapse. Only a slower defeat as rivals improved faster and shoppers stopped paying premium prices for history. By January 2026, the company that had once defined an entire product category emerged from bankruptcy, privately controlled by Pisea Robotics, carrying its famous name into a radically different future. The path began in 1990
Check the
when
servo
MIT researchers
calibration.
Colin Angle, Helen Gregg,
Running the
and
diagnostics
Rodney Brooks
now.
founded iRobot
Readings
to
look
build
stable.
practical machines
Good.
for
Let's
environments
proceed.
considered dangerous,
These
distant,
are
or difficult for
Look.
humans. Their early robots served military, research, exploration, and disaster-related missions, proving that compact machines could navigate uncertain terrain long before home robotics became a recognizable consumer business. Inside that engineering culture, Joe Jones kept pursuing a simpler machine with enormous commercial potential. An autonomous cleaner that could cross ordinary rooms, avoid obstacles, and remove dirt without human guidance. That idea became Roomba, introduced in 2002 for about $200, making a household robot feel less like a laboratory experiment and more like an appliance within reach. The early machines bumped into furniture, changed direction unpredictably, and followed paths that looked almost clumsy. Yet their visible movement made advanced robotics understandable inside kitchens, bedrooms, and living rooms. Customers were buying more than suction because Roomba offered saved time, futuristic novelty, and the strange satisfaction of watching a machine quietly perform one of the home's most repetitive chores. Sales passed 1 million units within 2 years, confirming that iRobot had not merely launched a successful appliance but created a new expectation that household cleaning could increasingly happen by itself. Revenue climbed, the company entered the NASDAQ in 2005, and new capital supported additional robots for mopping floors, cleaning pools, and clearing gutters, though none matched Roomba's cultural force. The failed side products mattered less because Roomba kept expanding through national retailers, television demonstrations, online videos, and word of mouth that turned the machine into a symbol of accessible automation. Its name achieved a rare commercial victory as consumers began using Roomba to describe robot vacuums generally, giving iRobot recognition that competitors could not quickly manufacture through advertising alone. Behind the famous name stood a profitable mechanism built on premium machines, replacement parts, frequent upgrades, broad distribution, and consumer trust in a company that made unfamiliar robotics feel safe. In 2016, iRobot sold its defense and security business for about $45 million. Concentrating its resources on consumer robots as the household cleaning market became increasingly crowded. The move simplified the company for investors, but it also removed diversification, making future results more dependent on shoppers repeatedly choosing Roomba over every cheaper or more capable machine nearby. By 2018, annual revenue exceeded $1 billion. More than 20 million home robots had been sold, and iRobot still commanded a formidable position in the global robot vacuum business. Yet the storefront beneath that success was changing because Ecovacs, Roborock, Shark, and other competitors were no longer producing weak imitations. They were advancing navigation, mopping, docks, software, and pricing. Several challengers adopted LiDAR-based mapping that could chart rooms precisely, while iRobot continued leaning heavily on camera-based navigation, a choice that grew harder to defend as premium prices rose. Roomba retained prestige, but shoppers increasingly compared measurable performance instead of origin stories, and being first could not make weaker features superior when alternatives were sitting on the same shelf. The pandemic temporarily concealed that vulnerability as homebound consumers spent aggressively on household technology, helping iRobot generate approximately $1.56 billion in revenue during 2021. Its stock also surged during that extraordinary period, reflecting confidence that automated cleaning would keep expanding and that the category's inventor would capture much of the wealth still ahead. Instead, consumer demand normalized, inflation pressured budgets, retailers reduced inventories, and rivals offered advanced docks, stronger mapping, and combined vacuuming and mopping at prices that made Roomba's premium increasingly difficult to explain. Revenue fell after 2021, But the more dangerous decline appeared in margins because discounting reduced cash while engineering, marketing, software, inventory, support, and global operations remained expensive. A simple question now haunted every product page. Why pay more for Roomba when another machine appeared to navigate better, mop better, empty itself better, or deliver similar results for less? In August 2022, Amazon agreed to acquire iRobot in a transaction initially valued near $1.7 billion, offering scale, capital, distribution, and a possible escape from intensifying competition. The proposal also triggered fears that Amazon could disadvantage rival vacuums on its marketplace, while critics raised broader concerns about a technology giant gaining more influence inside customers' private homes. European regulators warned that the deal could restrict competition by allowing Amazon to reduce the visibility of rival robot vacuums or increase their advertising costs across its online stores. Amazon and iRobot abandoned the acquisition in January 2024 after concluding it had no path to European regulatory approval, eliminating the rescue that investors and management had spent months expecting. Amazon paid iRobot a $94 million termination fee, but debt restrictions, transaction expenses, and repayment obligations prevented that money from becoming the unrestricted war chest the company urgently needed. The failed merger cost more than a lost premium because iRobot had spent roughly 18 months preparing for life inside Amazon while competitors kept launching products and reshaping customer expectations. Days later, iRobot announced a restructuring that eliminated about 350 jobs, roughly 31% of its workforce, while founder Colin Angle stepped down as chairman and chief executive. The layoffs reduced expenses, but the empty desks also exposed the company's brutal contradiction. iRobot needed fewer costs immediately while still requiring better products, faster software, and stronger marketing. New chief executive Gary Cohen pursued a turnaround through outside manufacturing, quicker development, and an expanded product lineup. But he was trying to rebuild momentum under declining sales and restrictive debt. For more forgotten stories where powerful American brands lose control of the markets they created, subscribe to Fortunes and Ruins as we follow the money beyond the familiar logo. In 2024, iRobot reported approximately $682 million in revenue, less than half its 2021 peak, while posting a net loss of roughly $146 million. Its annual filing warned of substantial doubt about continued operations, language that transformed corporate weakness into a documented survival crisis visible through audited statements rather than market speculation. The company was trapped between shrinking demand and fixed obligations. While every discounted machine produced less cash to finance the technology, advertising, and customer support needed to remain competitive. At the same time, iRobot depended heavily on PCA, its primary contract manufacturer, as unpaid production bills accumulated and the supplier's financial importance grew far beyond assembling robots overseas. By November 2025, iRobot disclosed that it owed PCA approximately $161.5 million for manufacturing services, including about $90.9 million already past due. A PCA affiliate also obtained rights connected to iRobot's term loan, placing the manufacturing partner near the center of both the company's operating dependence and its worsening financial structure. That arrangement created the decisive reversal because the business controlling the Roomba name no longer controlled the leverage. Its essential supplier also held claims that could determine whether it survived. Management explored strategic alternatives, but repeated covenant waivers became necessary, cash remained limited, and company filings warned that failure to secure financing could force severe cutbacks, closure, or bankruptcy. Tariffs added pressure to an already damaged model, especially on products manufactured in Vietnam for the United States, narrowing margins already weakened by competition, discounting, and softer consumer demand. On December 14, 2025, iRobot and 2 affiliates filed voluntary Chapter 11 petitions in Delaware with a prepackaged plan designed to transfer ownership without shutting down ordinary operations. Unlike a liquidation, the court-supervised process kept products, applications, customer support, and vendor relationships functioning while the company reorganized its debt and prepared to emerge under PCA's control. Under the plan, PCA received complete ownership. Secured obligations were restructured or canceled according to the confirmed agreement, and existing common shares were extinguished without recovery for public stockholders. The operating business survived, but the investment story ended, transforming a celebrated NASDAQ robotics company into a privately held enterprise controlled by the manufacturing partner that supported its final passage. The bankruptcy court confirmed the plan on January 22, 2026, and it became effective the next day, completing an unusually fast restructuring of a once prominent American technology company. iRobot retained its Bedford, Massachusetts headquarters and core American engineering functions, while PCA, with manufacturing operations in China and Vietnam, became the reorganized company's sole equity owner. The company also established an American subsidiary focused on data governance and protection, addressing privacy sensitivities that had followed Roomba's mapping technology and the abandoned Amazon transaction. Legal survival could not reverse the central loss because iRobot had moved from category creator to rescued brand after surrendering revenue, employees, market power, public ownership, independence, and shareholder value. The mechanism of collapse was brutally understandable. Premium pricing weakened, competitors advanced, pandemic demand faded, the Amazon exit disappeared, and debt narrowed every remaining response available to management. No single decision destroyed iRobot, but several defensible choices accumulated into a trap, including consumer concentration, delayed competitive responses, dependence on brand prestige, and confidence in an acquisition regulators opposed. The human cost remained visible in emptied Massachusetts offices, disrupted careers, unpaid manufacturing bills, anxious vendors, and shareholders whose ownership vanished when the court-approved restructuring became effective. For customers, Roomba machines continue crossing kitchens and bedrooms, demonstrating how bankruptcy can erase an old corporate structure without immediately removing the product or the name from American life. For every market leader, the warning is sharper because creating a category offers no permanent defense once buyers compare performance, reliability, software, support, convenience, and price without honoring the inventor. Continue with Fortunes and Ruins for more forgotten American stories of money, power, ambition, and collapse, where a famous logo can outlive the fortune and independence behind it. The Roomba still circles across living room floors, but beneath its familiar shell remains the ruin iRobot could never clean away. The public company, the lost control, and the fortune built on arriving first.